Good morning, everyone. Hey, Raj, Ian, how you guys doing? Another inside night, huh? And inventory was short for most of the night. It's just started to correct now. Holy cow, Ken, how you doing? Long time. Wow, man, you've been gone for a long time. Good to have you back. What's up, Cisco? How you doing? Hey, Moran, how are you? Sorry, yesterday I was really busy. I got your message. Got a little out of yesterday. I was bad with returning messages. I apologize for that. Okay, let's see what we got this morning. So inventory was short, it corrected. We're inside yesterday's range, right? Not much going on here. Go and take a look at our chart, which I have not updated. Overnight point of control is just down here. Now, all that means when we talk about points of control, it's actually, man, it's really badly named. It shouldn't be called the point of control because it implies some sort of control. There's no control, right? I've been thinking a lot about these market profile terms and how do I say it in a polite way? They're just really misleading, right? Value area, point of control, value area high, value area low. Stuff is really misleading. So I'm going to redo it. I already put in a glossary yesterday, right? Well, people think that there's some sort of a magic to these things, like the point of control when it moves up and down. All it means when the point of control moves up and down, it means if we're having good distribution or if we're accumulating. It's really like there's no control. There's absolutely no value either, right? Value is a weird term. Value is just means cost basis, right? So when you look at these charts, the blue stuff here, right? A little because it's slow right now, right? Might as well go through it. The blue crap here on these charts is what we call market profile. People call this the value area, which actually is meaningless, right? What they should call it, this is the distribution of the day, okay? The blue stuff is where 70% of the inventory is priced. The point of control is where 70% of the 70% is. That's all it is, right? A little bit misleading, but it just tells you if most of your stuff is priced here and tonight you're selling it higher, you're the wholesalers are selling it at a profit. If they were selling it lower, they'd be selling it at a discount, right? Does that make sense? Now, I know you guys haven't had your coffee and you're not very talkative in the mornings for these morning sessions. But if I explained it as this is how much we paid for the crap, this is how much we're selling it for, we're selling it at a premium or we're selling it at a discount. right? I think it would be a little bit easier for people to visualize the business, right? Instead of saying point of control and value area high and unfinished and all these crazy stupid terms they come up with, right? Just give people straight goods what they need to know to make money, right? Exactly, right? All these market profile terms are just like they're they're like vague. They're vague and you can't use it to make money. So all we do is we look to see if okay, we're in distribution tonight. Right. Okay, good. So all the cheap crap from yesterday is being sold at a profit. Good. Okay, and we know that. Now let's go and see where we can trade it and make some dough, right? So like the blue area, and then they call this the balance, right? I just call this cost basis. This back and forth is the cost basis. This is double, and this is four times cost, right? So if you're buying it up here, you know that you're buying at four times premium, right? Or at least two and a half, three times premium, right? There's your, and that word posh is a weird word too, right? I don't know where you guys got that from. In the States, we say fancy. Oh, you so fancy, right? So that's all it's, this is all, this trading thing is just, the older I get, the more I don't want to suffer seeing people struggle with like vague terminology, right? Distinguished. Right? You know, the vague terminology is what keeps people confused. It keeps them buying courses and books, but it actually never makes them any money, right? So let's cut to the chase. Let's get to the straight goods. Right now, see how these candles are tiny? Business is slow, but it's good enough that we don't have to put it on sale underneath 73. So we as traders, before London opens in 7 minutes, we're waiting for a discount for London to come in and bring in some cheap stuff, go under 73 so maybe we can buy 74 when it pops back up and sell 80 again. That's what we'd like. See? Does that make more sense? What's the trade you're looking for? Okay, the look below and fail is a great thing, but what does it mean? It means that the crap's too expensive right now. I don't want to buy it and hope for this. If they put it on sale down here and they hold this area and pop back up, that means okay, that means we got a good price. Let's get it at a good price and get out at a decent price, and we can make 5 or 6 points, right? That's what we're waiting for, right? We're waiting for a sale so we can grab some and flip it out. Make more sense? Pretend you're at Nordstrom's and you're trying to buy that last pair of Ferragamo shoes, and they're $1,500 and they're on sale for 300, right? Here we go. Here's the sale, right? There's a double top here. It's not actually a double top, but it is actually the sellers step in right at the same place. Okay. So when they do that, they're showing you that there's selling competition here. So if you were a short seller, you would have shorted 81, 80, and your stop would be 82, 83. Okay. Because you'd see that there's a constant seller here, right? They're just hammering away here. They're starting to price compete. So you'd be short here, and you'd go and you see there's a little bit of volume here. So as we come down, there's yesterday's close. Okay. Now let's see. There should be a few little buy orders there, and if not, we'll drop all the way down into this 71 area, right? And then do we catch a bid and then pop back up? That's what I'm looking for, right? Because I wasn't on the ball enough to short 80, 81. I should have. But if you explain to people the reason behind a trade, the reason behind shorting 81 is because everyone's starting to put it on sale. So we'll sell some too, and we'll maybe cover at 78 or 77 because that's probably where they're going to stop selling. So shorting a market is basically finding a group of sellers who are starting to bicker and lower price, right? So Raj goes $5, Ian goes 495, Cisco goes 480, Moran goes 475. So I'm selling with them, right? And when they stop selling, I cover. That's what shorting is, right? Not that it's overvalued. Overvalued has nothing to do with it. Who are you to determine what it's worth? Nobody cares, right? You're waiting for them to sell, and then you sell alongside. And when they stop selling, you buy it back. I don't think you could explain it in any more simple terms, right? See, there was that little. See, I told you there'd be some buy orders around yesterday's close. There they are, right? We went 2 ticks underneath, boom. So had I been short 81 or 80 and it got down here to this 77 level and I had a buy order, say I had a buy order in here and it didn't get executed, I just go and buy the ask, close the trade, make 2 points. Simple, right? You don't need to overcomplicate this. The only reason you want to overcomplicate this is to keep people paying 3, 4, 500 bucks a month to be in a trading room where you can just milk the shit out of them and they never learn anything. They never make any money, so they got to keep coming back, right? That's the only reason to make this stuff overcomplicated, right? So you can just keep taking people's money. I'm going to get into trouble for that, but I don't care. That's a good thing about getting old. Like yesterday, we were talking to somebody after the stream, and the poor guy was so confused trying to figure out what, right? Yeah, George, I know what you're saying now. He's saying POC is just the mathematical mode, right? The price where there was peak volume. But nobody cares. How do you use that to make money, right? Why don't we just get rid of all that and go, hey, that's where the inventory is priced, right? Once you start talking to people, George, about mathematical mode, where there was peak volume, 68% of the value area is derived from that. As soon as you start talking like that, people's eyes glaze over because people have a 10-second attention span. All of this work on market profile was done in the 80s when people paid attention. And even then, most of these market profile traders don't make any money because they don't tell you where to take the trade or how to take the trade. And therein lies the problem, right? Hey, John, what's going on? Right? So my whole thing, and I don't care, right? If people don't like what I say, why overcomplicate it? I'm here for the regular person who wants to make money. I'm not here to try and make myself look smart, right? I don't care. I just want you guys to make some money. I want you to be able to short 81, put your stop at 82, cover at 78, make 2 or 3 points, and pay your frickin' bills, right? I could care less about mathematical modes, no offense, George, or 68%. I could care less about that stuff. I want to see you guys actually pay your rent with trading, okay? None of that stuff means anything to me, okay? So if you guys want to learn, look at that. London opens and there's just no selling, right? No selling at all. So good information. Now let's see if we can go take out those 82 sellers up here. Why pro trader don't talk about R&R? I don't know what you mean. Wal Gamaza. Why pro trader don't talk about RR? What do you want to know? You mean me or other traders? There's our seller at 81 and a quarter. If they see bids, they'll lift their offer and we'll take out the 83s. Okay? So right there, if you were short here and you didn't cover where I told you to, now you're sucking wind. Okay? What's Monday? Remember what Monday is, right? Monday is month end. Tuesday is market maker month end. Last trading day of the month. Anyone who has to clean up business will be doing so today and tomorrow. Also, you got to remember that next week is month end Monday. What's Friday? Friday is a holiday, right? So next week is a short week. So most large trading shops and houses, right, will start covering their risk, right? Yeah, what does he want to know about risk to return? He wants me to talk about risk and return and reward? Like, is there a question in there? Like, so my risk and reward stuff is simple. Does the trade make sense? Say if you were short here because there was a seller. You put your stop here. If the seller lifts over 81, the trade doesn't make any sense. So you're risking a few ticks to make a couple of points. That's risk and reward, right? It is also the end of the quarter too. Thanks, Marcus. Very true. So the way that I lay out trades is if the trade does not make business sense, you're out of it. If you buy something at 5 and somebody offers it for sale at 480, it means your inventory is mispriced, right? And you always want to be buying or selling where your edge lies. That's the best risk reward, right? The best risk reward is not trading in the middle of a range, not trying to trade. You have to identify where there's a seller and short with the seller. If the seller goes away, your trade goes away because the business reason for your trade does not exist. So life is very simple that way. You don't have to sit there and calculate ratios and all that stuff. You can clearly see that the sellers are lifting the price, right? There was a seller at 81 and a quarter. Yeah, right now I could love to show you a look below and fail, but there isn't one right now, right? So if you wanted to look at a look below and fail, there would have been one here, a look below and fail of 77. Here's a look below and fail of 73 and a half, right? All it means is you're watching a level, hopefully at an edge. The market goes underneath, comes back up. The sell orders are completed, the market rotates up, you buy something, you put your stop here, and you sell into the strength. That's all there is to the, right? Right now, there is no look below and fail. There's no look above and fail. The market's in the middle of a range. Thanks, Cisco. Yeah, you could do a look below and fail of the close, right? If you're a fast trader, right? Here's a look below and fail of the close. It looked below, came back up. You'd buy 78, put your stop at 77, sell 80. Does that make sense? Jungle Jamboree? All a look below and fail means, in plain simple English, is there's sell orders that take the market underneath a level. When it pops back up, it means the sell orders are done. So you buy it, you put your stop here, and then you sell into the strength caused by the lack of supply. Strength in a market is caused by a lack of supply. Basically, it means the sellers who own the supply are raising price. When they do that, you sell into it. Yeah, when you first start trading it, just accept it if it stops you out. This is the thing with the trade, okay? You are going to screw it up a bunch of times before it actually starts to work. Because every time the trade is different because the order flow is always different. That's why trading simulators, as good as some of them are, cannot actually match the order flow of the market at the time because the order flow changes constantly. So you have to take a number of different look below and fails. I did a video yesterday that we put out. I don't know if Steve put it out, where I showed like 6 different look below and fails, and they're all different, right? They're all different, but they're all tradable. But knowing the subtleties of it means that you have to do the trade 500 or 1,000 times. People hate hearing that, right? They hate hearing, oh, you got to take the trade a bunch of times to actually learn how to do it. Ooh, wait a minute. But this other guy says, I can get abs in 5 minutes. JJ, I don't want to do this 1,000 times. That's the problem. The problem is people don't want to take the time to learn how to do it. That's tough. You got to put in the work. Trading is a physical skill, right? It's like learning how to ride a skateboard. It's like learning how to do everything, right? I do not use profile for my decisions. I just spent 20 minutes talking about how profile is vague. What I do is I use profile. This is a map of the city. If I want to go and do business here, I use the 1 minute chart to tell me what's going on in this neighborhood. Very simple, right? Always start out with the MES, use smaller size, learn your craft, right? When I will use profile to make decisions is if I see a poor low or a poor high or single prints, right? Or I'll use the stops. Basically, it's just a fancy half-hour chart. Now, I'm not bashing market profile. I'm just saying there's a lot of market profile education that is useless. That's actually not going to help you make money, right? Because they don't teach you where to take the trade, right? So the market profile just tells me that the inventory is here and we're selling it up here, right? So it's distribution. Get it? I do not take look below and fails of value area high and low. That's from 2016. That doesn't work now. Don't worry about single prints right now. We don't have any. All they are is just separating two distributions. Okay? On the way up, it's a short position. On the way down, it's supply. Simple, Sergio. Simple, right? A look above and fail, I would like to see a look above and fail of 7,500. Right now, right, we're right in the middle of this zone or close to the middle of the zone, so there's really there's no clear trade here, right? That's why I draw these zones, right? No, a poor low does not represent a wick. A poor low means that 2 half-hour bars have the exact same low. What that means is that there are buyers competing there. It has nothing to do with wicks at all. And that's another thing. I don't look at candle wicks and twicks and all that shit. I look at the top of the candle is where the sellers initiate. The bottom of the candle is where the sellers stop initiating or stop selling. That's another thing. Candles have been prostituted where people have to memorize all these useless patterns that don't make them any money at all, right? The top of the candle is where the selling starts. How do I know? Because I was a seller for 30 years. I start to sell, everybody else starts to compete and push price down. When the top of the candles are moving lower, that's trend down. When the top of the candles are moving higher, it's trend up. What does trend down mean? Trend down means that the sellers are lowering price. Trend up means that the sellers are raising price because they see buyers. It's very simple. That's all you need to know. Now you can go and overcomplicate it as much as you like, and, revel in being unprofitable. Or you could get with the program, keep it simple, and start making some money. Which would you prefer? That was not a rhetorical question. uh, yeah, actually, Jungle Jamboree, I think you're joining us a little late. If you want to just rewind this YouTube, I just answered all the questions that you're asking. Of course, I look at risk and rewards, right? Your trades have every trade is a business decision, right? So if you're risking a certain amount of money, where does that trade not make sense that you get out of the trade? That's the risk part. The reward is if I buy something at this price, I put my sell orders out. If those sell orders do not get executed, I get out of the trade because nobody wants to buy it at that price. Trading is simple, right? So any more questions? Yeah, there's no edge right now, Cisco, right? It's just distribution, right? It's just simple distribution, right? So you can probably take 90% of the stuff that you think you know and throw it away and just focus on one trade. One trade that'll grow with you, one trade that'll teach you about markets, and the most common trade that there is in markets that have limited supply like ours. And that's the look below and fail, right? When supply runs out, price goes up. Yeah, poor high yesterday, Raj. So Sergio, that double top there, that's a poor high. That means that sellers were competing. How you trade that is you short the poor high, okay? Put your stop here, and then you use the levels I give you here to cover. Pretty simple. It's a trade that's scalable, right? No problem, Sergio. Once you learn to look below and fail, it'll teach you to be a better short seller because you'll be able to recognize competition. Most people have a hard time shorting because they don't understand when to short. They think that shorting this is the way to go, and then they get trapped. Then they cover and it falls apart. You don't want to short the front end of the move. You want to short the back end of the move after a distribution. Front end of the move, back end of the move. Front end of the move, distribution, back end of the move. This is not for you. That's why people get trapped. So if you start buying inventory and selling it, then you're going to know when there's selling competition. When you recognize competition from other sellers, that's when you should be shorting. So we teach you how to go long. It teaches you how to be a better shorter. Simple. And you learn how to do the look below and fail. You learn how to scale it. So you start with a 1 minute chart and you scale it as you gain skill and capital, right? You can't make 10 grand a day if you don't have any skill. You just got to learn how to make 50 bucks a day and keep it. If you can't make 50, $100 a day and keep it, you need to work on your consistency and you need to work on your skill. People talk about edge, right? I talk about skill. You need to develop your skill as a trader. That's going to take some time. That's exactly why they're colored Jungle Jamboree. It's the edge. So when the market did this, right? This is a look below and fail. Now here's a false start, and you might get in there and pop out of it, and then you see it go again, and you take the trade again. But it's from one color to another is where you get your best result. Why is that? Because you're at an edge. Exactly. The blue zone is the cost basis. Bingo. Now you're cooking with gas, right? So blue is cost basis, 2 times profit, 4 times profit, and then 2 times discount in case we need it. There you go. So the best trades are when it goes like this, or when it goes like this, or when it goes like this, from one zone to another. Because at the edge is where you're getting the best discount, right? Here you're not getting the best discount, right? That's a Canadian saying. Now you're cooking with gas. Let's see where we're going here. It's slow. What's the news today? Do we have news today? PMI, Magnum PI, one of the PIs. What's going on today? Let's go see. Thursday. Oh, jobless claims, personal income, blah, 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 blah. Raj, were margins increased tonight? I didn't even look. How did Micron do last night? Didn't even look. Cool. The highest probability of the look below and fail is at the edge. The edge of the cost basis. Other edges, you might get a decent move. Like there's an edge here, right? And you could see, like, if you were dialed in, can you see the bottom of these candles not being able to transact with this level? Here it did. Here there's a space, space, space. So now you know that there are bids here, right? There are buy orders here. This candle is where you go long, you put your stop here, and you sell into the next level. Very simple. Right? There are certain things like you draw a line, look, space, space. The space between the bottom of the candles, and it doesn't matter if it's a wick or who cares. The space between the bottom of the candle and a level you're watching means that there are buyers there, unfilled buy orders. There you go, Cisco. Exactly. Right? Beautiful trade, right? You see that space? There's a bid. That's where your stop goes, right? That's where your stop goes. So if you are going long, you're long and your stop is right where that space is because guess what? That's your backup. Those are the bids. You don't need a DOM. You don't need any kind of fancy quote unquote order flow software. All that stuff is snake oil. Bids. Bids moving up. Go with. Very simple. You got to be able to pay attention. If you can't pay attention, your goose is cooked. Right? Thank you, Raj. You got to be able to pay attention. Most people don't even know to pay attention to this stuff. So that's why they lose. They miss everything. Look at this. Look at the lows getting higher. That means the bid is following the offer up. Most people don't even know what an offer is. They don't even know what a bid is. I'll go, oh, the market's bid here. They're like, what does that mean? Uh-oh. Right? I prefer to wait for it to close above the level. Now, sometimes you get these crazy ass big candles and they go and you just got to grab on. Sometimes I'll miss that trade. I don't mind. I prefer the market to go up, come back, and close above that level. Right? That's always the best when it does that. Now, if we take out that overnight high, Here are some levels for you guys to watch for. I'd be looking for the 92s. It's that same creep up that we're getting, right? That grinding creep. We're kind of in a couple of days balance here, right? It's a big balance area. And remember, we do have that gap above us, right? This is a supply gap, right? There's a ton of, we don't know what's in there until we go and get in there and poke our head into it. Let's see as we get into month end if we can maybe go up into that gap. There we go. Took out the old high. But here's a clear situation where we took price up, went sideways, it brought in buying, went sideways, it brought in buying. This is a clear indication of when price stability brings in buyers. No reason to short this thing now. Not since we started anyway. Oh boy. You guys have big plans for the 4th next week? It's a big one, right? 250 years? No? Not many Yankees on this call at this time? Yeah, just wait for the edges, man. Exactly. And that is the trick to a long trading life. You just wait for the edges. You let everybody else go and run around and get kicked around. You just wait for the edge, you take your trade, you make your money, then you go do something else, right? Simple life. Very simple. That's the way to do it. You just need 1 or 2 trades a day. Exactly. There you go. That's all you need. Don't need to make 20 or 30 trades a day. You just need 1 or 2 good ones. And then you need to keep the money that you made. What's up, John? Thanks, Sergio. I mean, I've been doing this for 34 years, right? And I've been teaching for now. I've been teaching well since I had my heart attack in 2012. So it's taken a long time to be able to like kind of put it together. I haven't traded at all this morning. I need to wait for an edge, which is okay because I got a bunch of work to do, right? Good. Way to go, Sergio. Way to go. Yeah, if you talk through the trades and you understand what's going on, you'll find that your life's a lot easier. Why am I buying this? Oh, okay, because they put it on sale. Now, is the supply run out under this price? Okay, I'll buy a little bit here, put my stop underneath that price. Now I'm going to put my sell orders out. So as soon as the market goes up, boom, 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 I'm out of the product that I bought. Right? Just keep doing that. Keep your discipline, right? It's repetition and discipline. It's repetition of the same business transaction and the discipline to wait for that particular transaction to occur. That's why you never hear me talking about FOMO or revenge trading or any of that nonsense. because that has no place in a business, right? There's no such thing as revenge baking. There's no such thing as revenge surgery. There's no such thing as FOMO banking. Those are all made up words, right? The skill, Sergio, you just take time to develop, right? So just practice your entries, practice your exits, right? Don't trade at the wrong time. Like, don't try and trade this. This is not tradable for us. This is so wholesale can make some money. Don't worry. Over as the morning progresses, there'll be opportunity. Don't worry, it'll be there, right? Yeah, you don't hear neurosurgeons doing revenge surgery, right? There's FOMO baking? Oh, okay, I didn't know that. Fear of missing out baking? Okay. Well, I never get any baked goods, Like nobody sends muffins anymore. I guess that was an 80s thing. FOMO baking, is there a revenge baking? That's what I want to know. Yeah, we're in pure distribution here. There's nothing going on. Not for us anyway. Tilt surgery, exactly. Oh no, this surgery didn't go well. I better kill the patient, right? I got a great way to deal with FOMO. Jungle Jamboree. Every time you get FOMO, put your hand on your desk, take a hammer and hit your hand with it. That'll cure your FOMO right away. When you set a price is going, if price go up and stay balanced, it brings buyers. Is it the same principle? Well, that's a trend down market, David, right? You're looking at the liquidation from a couple of days ago? How it works when it's trend down for you, David, is to get the hell out of the way and wait for the market to stabilize, right? Get what I'm saying? Just keep it simple, right? Just get out of the way. That's pretty much it for me today. Thanks, everyone. We will see you at 9:15 for the next session. Have a great morning. Stay out of trouble. It's almost Friday. Almost Friday, my friends. Keep the money you made, okay? Thanks, folks. We'll see you soon. Bye for now.